Phil, there's a magical story in the market that you're going to wind up having a 9-month extension of these OPEC cuts. Everyone's going to agree. We're going to see 90 to 100% compliance. You're going to see oil stabilize at 55, and we're going to see oil backwardate. Is that true?
Even if you get the cuts, no. The inventories level is so high that the producers really have to cut stocks by over 1 billion barrels in the next 9 months to get the market into backwardation. We're going to put out a note this morning that just looks at the supply of storage based on some new data. And the supply of storage is a very old concept. It goes back to the agricultural economics. It shows the backwardation versus contango and inventories. And in fact, you need to get global inventories down by actually 1.3 billion, which means OPEC would have to raise its cut in production by 2 million barrels a day or more.
Wow.
And the fact is that if you look at the share price of the Prudhoe Bay Royalty Trust, and I know you have this queued up, the market just understands this. They see essentially prices staying where they are, going up maybe 2% a year for the next 3 or 4 years.
Well, Phil,
OPEC hasn't done enough.
Phil, let's bring up that chart, because you mentioned this to me about a week ago, and I was like, what are you talking about, Phil? So we all look at inventories, right? You look at PB Prudhoe Bay Royalty Trust. It basically gets the first 90 million barrels a day from the Alaska region, from BP's Prudhoe Bay. And you say this is a pure play on oil because it's a royalty trust. The fact that it hasn't moved signals the real fundamentals of the market.
Yeah. Now, I've been following this since 1989, and the only thing the shareholder owns is a call on production from Prudhoe Bay. So you're just buying a strip of oil production. And if you look over the past 30 years, it goes up when shareholders actually and investors actually believe that something's going to work. And if you look at the chart, it jumped briefly when OPEC made its agreement, and then it came back down. And it's staying around $20 a share, which when you work through the model says the prices are going to creep up a little. Maybe they get to $55 a barrel sometime end of this year, maybe next year. But there's just no expectation that this is going to do very much to prices. And the reason is they're not going to get to backwardation. Global inventories are just too high. Nobody, I'm afraid, on the street has really done the hard work of looking at the relationship between inventories and the price curve. Goldman put out a really great note Monday, but they didn't get into the data. And once you start digging in the data, you say the stocks are so high that as I said, the OPEC cut would have to be double or more for a year to really get markets into backwardation.
Kris, what do you think about that?
Well, I don't know anything about the Prudhoe Bay Royalty Trust, but I do agree that we would be highly benefited if they would cut a little bit more than they have. I don't know if it needs to be an extra 1 or 2 million barrels a day, but I think even the signaling that they're willing to take that step, if it looks like we're not going to work through this inventory they think we're going to work through by the end of the year, would be highly beneficial. And so I do agree that they need to take some extra action, I think, to really put a fundamental base under oil supply at this point.